Welcome to the second of our 3 videos where we continue our examination of the major financial statements by looking at the income statement, also known as the profit and loss. Here we measure and report financial performance for a business for a particular time period. To do so, we're going to examine the accounts worksheet. Then we're going to look at the income statement itself, or the profit and loss, and then we will then look at the statement of financial position, or the balance sheet. So here we have the accounts worksheet for May 2013. We have our assets, our liabilities, and our equity. You may recall that in our last video we used the cumulative balances to transfer to the statement of financial position. In this video we're focusing on the profit and loss or income statement column on the far right hand side, which transfer to the income statement from this accounts worksheet. Our first step is to bring forward the balances from the previous month. And we had £700 for equipment, £1,200 for stock, £18,368 for cash, £1,200 for creditors, £20,000 for share capital. A loss of £932 was brought forward from April. In the month of May we purchased stock worth £3,000. We pay, the terms are actually on credit, so the £3,000 is a creditor balance, and there's no transaction for the month of May in the income statement because no stock has actually been used in that particular period as yet. However, as we go through the month, we do actually sell £5,000 worth of stock on credit, and we record this as a sale in the month. We also sell some of our stock for cash. Again, this is recorded in the month. So we now have £6,250 worth of sales so far in the month of May. We also obviously use the stock that's been shipped out to the customer, the 2iBike helmet, and the first shipment was for £2,750 for 100 bike helmets, so we'll record that in our costs. And the second shipment was for the cash sale was £700 worth of stock for 25 bike helmets. Again, we record this as a cost in our income statement. Later in the month we actually pay our supplier £1,200, which reduces our bank balance and reduces our creditor balance. Notice there is no transaction here on the far right hand side. This is purely a cash transaction. This is not a cost that relates purely to the month of May. This is a cash transaction for the payment of supplier. Then we have salaries of £1,000, which we record as a cost in the month. Next, we are aware that we are storing the 2iBike helmet in a local garage, and as yet we haven't been invoiced by the garage owner, but we know that we should have paid rent of £500 for the month of May. So we're going to record the cost in the month of May, and we're going to accrue this and record it under our creditors worth £500. This is an accrued expense for the month of May. We physically haven't paid cash as yet, but we're going to accrue under our creditors balance the £500. Next we have insurance of £50. Car running costs of £80. And lastly, we're going to look at depreciation. But before we do that, we've got to work out a method to depreciate our asset, which you may recall is our laptop purchased at the end of April, worth £700. So we have to decide on the method and how to charge the cost of depreciation in the month of May. The laptop has been working hard for our business to help us generate wealth, and we need to allocate some kind of cost into the income statement for that particular period. To do so, we're going to look at straight line depreciation for the laptop. If we assume the laptop costs £700, we estimate that there will be a residual value of £100 after 2 years, so the depreciable basis is £600. The asset will fall in value by £600. If we're going to depreciate this asset over 2 years or 24 months, this equates to £25 per month. We can now present this that the starting book value in May was £700, less the depreciation value of £25, means the net book value is £675 once we've deducted depreciation. We continue this process throughout the life of the asset in our records. So if we turn back to the accounts worksheet, we can now record the £25, and you'll see that the net book value is £675 for the laptop, and we'll record this in our income statement. So we now have all of our entries in our income statement, and you can see instantly that we have a profit in a period of 1145, and this is the sum of all of the transactions in this right hand column, which are now going to transfer across to the income statement itself. So we have sales of £6,250. We have cost of those sales, these next two transactions, so we have £3,450, and then we have the overheads or administration expenses here to record in the income statement. So with sales of £6,250 and cost of sales of £3,450, we have a gross profit of £2,800. We can also describe this as our gross margin. That is the gross profit divided by the revenue or sales figure of £6,250 to give us our gross margin of 45%. Next we have depreciation of £25, insurance of £50, motor vehicle running expenses or petrol of £80. We're going to record the garage costs as rent and rates of £500, and finally salaries of £1,000. Our operating profit, or net profit as we can call this, is £1,145. That's our gross profit figure less the remaining administration expenses, also known as general and administration if you're referring to Jack Will's accounts or larger company accounts. So our operating profit, after taking off all of our costs from our revenues, we have 1145 in terms of operating profit or net profit. The net profit margin is 18%. That's if we take the figure of 1145 and we divide it by the sales revenue figure of 6250. So 1145 divided by 6250 will give us our net profit margin of 18%. You notice here that we don't have any finance income or finance costs. For example, if we had an overdraft where we're going to incur interest, in this month we don't have any, and so our profit before tax is the same figure, and at the moment there's no tax, so we have a profit of 1145. The key point to note here is that the figure of 1145, this profit figure here, will actually be transferred across to the statement of financial position, and there is that final link between those two statements, as we'll see shortly as we transfer the balances back across from the accounts worksheet. But this 1145 will be picked up and transferred across. So if we return back to the worksheet, if we pick up the cumulative balances, you'll see that the equipment is £675, stock is 750, debtors is 5,000, cash is 17,288, creditors is 3,500, share capital 20,000, loss brought forward from April is minus 932, and in the month of May we have profit of 1145. So we take each of these cumulative balances and transfer in the same order we have here across to our statement of financial position. The first thing to record is our net book value of our laptop, which is £675. Then we have inventory of £750, trade debtors of £5,000, the cash or bank figure is 17288. Our creditors balance is £3,500, and the net current liabilities is 19,538. So we have a surplus of current assets over current liabilities of £19,535. So our working capital looks healthy. At this stage we don't have any loans from the bank, but we do have share capital of £20,000, a loss of 932 from April, and for May we have £1,145 of profit for the period. So our total equity equals our net assets. So to summarize, in our income statement we've looked at depreciation and using straight line depreciation as opposed to reducing balance depreciation. This then adjusts our statement of financial position figure, or our non-current assets, to leave us with our net book value. Then we've looked at our cost of sales for selling the 2i bike helmet to our customers, and this affects our inventory or stock valuation on the statement of financial position. And finally we've looked at accrued expenses, in this case an invoice that hadn't been received from a supplier, and we include this in our balances or creditors balances on the balance sheet. In our next video we'll look at the statement of cash flows.